Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Global stocks extending a rally now 8 days in a row. Investors holding out hope for a quick economic recovery. Meantime, experts are warning of a second wave of job losses as tensions between the U.S. and China continue to escalate. The Trump administration now suspending passenger flights to the U.S. by Chinese airlines, saying this is in retaliation for China barring U.S. carriers from re-entering the country in the midst of the COVID-19 pandemic. This as protests continue across the country after the death of an unarmed black man, George Floyd, at the hands of Minneapolis police. Additional officers are now being charged, and the original charge has been upgraded to second-degree murder for Officer Derek Chauvin. Some cities are planning to relax their curfews tonight, but the president's suggestion that the military be deployed is still sparking fury. I want to bring in Bloomberg's Abigail Doolittle, our markets correspondent, who's been following the ups and downs and mostly ups today. Abigail, I still do not get it. The NASDAQ 100 briefly passing a record closing high. What are investors seeing that the rest of America isn't?
It is simply extraordinary, Emily. That's the only word to really describe this disconnect. On some real deep psychological level, I think for most of us, it's hard to believe that you can see stocks climb day after day, as you were mentioning, that NASDAQ 100 close to a record closing high, not quite there. How does that happen when we have this sort of social unrest in the United States, a possible second wave of the virus, the fallout from the original virus, and those U.S.-China trade tensions? It just doesn't make sense. It does tell you, though, that traders right now believe that the corporate profit outlook is not going to be too much worse than they're expecting, that the Federal Reserve's liquidity is really supporting the system. So on the day, tech had a solid finish, although it was a little bit bifurcated. We had the NASDAQ up about 0.8%. Zoom put up a big quarter. The chip sector was up really big despite those U.S.-China tensions. And there it is, the NASDAQ 100 almost taking out its last closing high. Very briefly, Emily, from a technical standpoint, as you know, I do like charts. There could be some sort of a dangerous pattern there, suggesting that maybe this is just a bear market rally. Too early to say whether or not that's the case. But right now, it really is simply unbelievable the way that stocks are climbing against this particular fundamental background.
Meantime, let's take a deep dive on social media stocks because there's been so much controversy here surrounding Facebook's decision not to take action on the president's post. Facebook ending the day down, Twitter ending the day way up, Snap slightly negative after Snap took a stand saying they would stop promoting the president's account, sort of moving into the Twitter camp. Talk to us about the action there.
So Snap is a perfect example of this sort of an issue. So Snap, as you just mentioned, saying that they're not going to promote President Trump on their main page there, similar to what they would do, the Discover page, for other high-profile people such as Governor Cuomo or Kim Kardashian. You know, President Trump doesn't really need that. So it's more of talking the talk than walking the walk, because if they were really going to take a hard stance, they might do something more similar to Twitter where they're labeling his tweets. Nonetheless, the perception is they're taking some sort of stance, whereas Facebook is perceived to not be taking a stance. So they're placating some folks. But at the end of the day, Emily, this is very unlikely to affect the bottom lines of any of these companies. And here they are out of the March lows, not quite the March lows. If we had that precise date, if you can believe it, Snap is up 135% since March 18th. That was when that stock bottomed, doing far better than Facebook and Twitter. But all of these stocks up more than 40% out of the March low. So again, the disconnect on the idea that they put up less bad quarters, that advertising wasn't as bad as expected. It'll be interesting to see if that trend continues as this economy hopefully has a successful reopening.
Right, and of course, you've seen some activity surge on Snap with everyone, so many of us sheltering in place and turning to technology. Okay, Bloomberg's Abigail Doolittle, thanks so much. Now, as Abigail mentioned there, Mark Zuckerberg facing mounting criticism after standing firm on his decision to leave up a post from President Trump where the president suggested that looters be shot. Employees have staged a virtual walkout in protest. Some have even resigned. Our Bloomberg opinion senior columnist Tim O'Brien is weighing in on this, saying that Zuckerberg has now reached a tipping point. Tim, I can't wait to hear your line of thinking on this. This is the first time that we can remember that Facebook employees have so publicly called out their CEO.
You know, I think a lot, Emily, has been simmering beneath the surface at Facebook for the past, 4 years, really. I think it began with concerns about the role the platform played with misleading disinformation during the 2016 campaign. There was a Cambridge Analytica scandal. Some senior leaders have left the company over the last year or so. Mark Zuckerberg has really reasserted himself at the company. He's shuffled his board. He's put in people who are more friendly to his leadership and point of view on the board. And then we've come into this social crisis caused by the pandemic, and I think racial unrest on the streets of our biggest cities. And people are really scrutinizing Facebook, and its employees are scrutinizing Facebook in terms of the role the platform plays in the world.
Speaking of employees, a tweet here from Jason Sturman, an employee at Facebook. I don't know what to do, but I know doing nothing is not acceptable. I'm a Facebook employee that completely disagrees with Mark's decision to do nothing about Trump's recent posts, which clearly incite violence. I am not alone inside of Facebook. There isn't a neutral position on racism. Now, I'm curious, Tim, because Zuckerberg is trying to, in a way, almost pretend that Facebook doesn't take a stand on speech, when for a normal user, Facebook might take action on that speech. And Facebook does fact-check stories with third-party fact-checkers here. So why should politicians be given special treatment on Facebook itself?
Well, I would argue they shouldn't, Emily. And I think to add to the list of examples you provided, remember, to Zuckerberg's credit, when the coronavirus pandemic began, he recognized it as a threat very early, and he actually requested Facebook employees to police the site for false or misleading information about how to combat the coronavirus. He set up a coronavirus information center on Facebook itself that is clearly a choice for veracity and high-quality information. And I don't think any subject or person on Facebook should be immune from that, including the President of the United States. I think the fine line that Mark Zuckerberg is trying to walk here isn't really about free speech. He's thought it through, and he says he believes all speech should have a place on the platform, and that's sort of a classic free speech defense. But as the Supreme Court has noted in the past, you're also not allowed to step into a movie theater and falsely scream, "There's a fire." We limit some forms of speech, and I think what's concerning the Facebook employees is that Zuckerberg is identifying this as a free speech moment when actually it's about proffering dangerous and violent misinformation that throws fire on to a moment of great social unrest in the hands of the president in this moment, but in the future it could be in the hands of someone else. And I think that Zuckerberg actually wants to keep the debate about speech because he doesn't want to get regulated as a news provider. He would prefer that regulators see Facebook as a technology platform and not a news provider, because then he'd have to engage with all the responsibilities and regulatory regimes that come along with being a responsible news provider.
And Facebook does have regulation to worry about with some of these antitrust investigations. Twitter is, to be fair, a much smaller company. That said, now that Twitter has taken this stand, there are bound to be more controversial stands that Twitter and Facebook are going to have to take. If the president keeps up his behavior, tweeting, calling Americans hoodlums and thieves and losers and lowlifes, calling in the military, what do you think? What battle do you think this sets up going into a very controversial election when Facebook already has been criticized for sort of, falling asleep at the wheel during the last election?
Well, and they've already said, Emily, that going into the 2020 election, they don't plan to vet political advertising for veracity, which is a problem. And again, I don't think this comes actually from a principled place of free speech protection. I think this is essentially Mark Zuckerberg, not wanting his expenses to go up, to actually have to hire people and go through all the processes he would need to monitor content. He could solve this very easily, by the way, as a first step by simply labeling content as false or misleading without taking it off the site, but he's not even going that far. I think, and then I think secondarily, there was a recent study conducted internally by Facebook, commissioned by senior executives, to look at whether or not the site and the way that users interact on the site is really grounded in polarization and division. And their own internal study reached a conclusion that, yes, indeed, there's not only a lot of it, but it's actually one of the sort of raison d'etre for Facebook's being. It's a place that people gravitate toward because they can fight it out, essentially. Facebook killed that study, and a senior executive at Facebook said after it was killed that measures to sort of counteract that behavior was too, quote-unquote, paternalistic. And I think that that's essentially Facebook giving up its responsibility to be a good member of society and put the common weal ahead of the bottom line in this case.
All right, Tim O'Brien, our senior columnist for Bloomberg Opinion. We could go on for hours about this. I appreciate you calling in and sharing your thoughts with us. Okay, coming up, $14 trillion in reparation for Black Americans. That is what the founder of Black Entertainment Television, Bob Johnson, is calling for. We're going to talk to him next at this critical moment in U.S. history. This is Bloomberg. Bob Johnson is the founder of Black Entertainment Television and made history as America's first Black billionaire when he sold BET to Viacom in 2001. Now he is calling for the payment of $14 trillion in reparations to African Americans, and he joins us now live. Bob, so great to have your voice here on the show today. We're going to get there, but first I want to get your thoughts on the state of things. We've got the death of an unarmed Black man, George Floyd, at the hands of police, protests, looting, our own president saying he'll use force to contain it. What is your thought on the state of America right now?
Well, the state of America sort of goes up and down depending on what I call pressure events that happen in American life. And it tends to show itself in terms of a reaction from the Black community, which is built not only around the event, in this case, the tragic death of George Floyd, but built around frustrations and a little bit of bitterness and anger at some of the factors that separate them from the American dream in this country. And when you get that kind of mix of events, attitudes, and problems, you have what we have here in Minneapolis and around the country. And I think the same thing happened in Detroit when you had the Detroit riots, which led to the Kerner Commission report, which said unequivocally that we are living in two nations, Black and white, separate and unequal. So that's some 50 plus years ago. And you go to Ferguson when Mike Brown was killed. These things happen not just because of the event of a tragic death, but because there is a brewing frustration among African Americans that they are not living the full extent of the American dream.
Now, you're calling for $14 trillion in reparations to the Black community. Walk us through your thought process on that number and what that would solve.
Yeah, let me deal with the thought process on the number. If you take from African-American slavery through Jim Crowism, through segregation, both de jure and de facto, and by the denial of certain economic and equal rights, it led to a chasm of economic inequality. And that inequality came about because wealth transfers took place from African-American slaves, no payment for labor, to white owners of plantation farms and otherwise, who then used that money to make additional wealth throughout the country. You had another transfer when African Americans were denied equal education opportunities, Remember when we had separate and equal in education? Again, education being a path to wealth. You add to another wealth transfer when you take into account the home ownership development in the U.S. Under the U.S. policy, people who own a home and have a mortgage can deduct their interest payment on the mortgage against their taxes. People who have to rent because they don't have the money to pay for a home and don't get the mortgage, they pay rent, but their taxes are taxed based on their income. So in effect, African Americans are subsidizing white homeowners. That's why African Americans are 40% homeowners, white Americans 70%. So you move forward till today, the net worth of a median white American family is $170,000. The net worth of a median African American family is $17,000. So you have a wealth gap. Reparations, in addition to atonement and apology, is a way to close the huge wealth gap between African Americans and white Americans. So that $14 trillion is an analysis that says if you could bring us equal in home ownership, equal in education, equal in income, equal in wealth and savings and investments, that number, when it's brought to equality, would, if paid out in cash to over 40 million African Americans, would equal approximately $14 trillion. And there is no reason to argue why African American wealth transfer was made under government influence, under segregation, and under racism. So what is the problem with paying people? And I did the math on the basis, let's say you paid over 30 years, it's about $11,000 per African American soul in the United States. And I say to my white American friends, what is wrong with doing what people did in Germany after World War II and the Nazi horror? They paid reparations to Jews. The Turks, the Armenians are constantly calling for reparations against the Turks for attempted genocide. We paid reparations to Japanese Americans who were interned because of the war with Japan and the attack on Pearl Harbor. Reparations is not a new factor. And so to me, to white America, why not? Instead of paying welfare, child support, not child support, but child programs, and instead of paying food stamps, instead of doing Section 8 low-income housing, that's money, it's coming out of the taxpayers, no doubt. Take that same amount of money, put it in the hands in cash of African Americans, and let us define and implement our own destiny using wealth, much like every white American did in this country. I frankly don't see the issue of paying reparations. Plus, you get to Black Americans, when white Americans say, we are sorry for what we did to you, that's a change in the heart of probably the most forgiving people in the world, Black Americans. That has, to me, an emotional change and shift when Americans begin to see themselves in a capitalistic nation as equals.
Meantime, as we've been speaking, President Obama has been speaking at a virtual town hall about racism. And to your point, he said the pandemic has exposed healthcare vulnerability, inequality, and also that these events are as profound as any he has seen in his lifetime. I do want to get your thoughts on what's happening on social media, because so much of this photos, videos, commentary is pouring out on social media. You've got Twitter taking a stand against the president's remarks, Facebook letting them stand. Which company is making the right call here?
Well, I think the key issue that Americans should understand, that those two platforms are so dominant and so ubiquitous that they have the potential to change human attitudes and feelings and ideology. So with that goes some responsibility. But responsibility, if measured by where you stand, depends on where you sit. You can get the kind of coverage of flow of information that's based on the people who control the platform. So to me, I take the position that if they keep going the way they're going, the government may declare them a common carrier or a public interest property, much the way they do broadcast because they use the public airways. So if you're going to look at one person and say, what you're saying is wrong, and I not only say you're wrong, I pick the fact checkers to back me up. That raises a serious question. What happens when somebody you don't like may be in charge of that platform and they pick what they think is right and they hire the fact checkers to back you up? So I think both Twitter and Facebook need to take a long, hard look at what they've created, and the monster they created in terms of business may come back to bite them in terms of just ideology about what is in the best interest of the American people.
Meantime, I want to get your thoughts on what's happening in the entertainment industry. Blackout Tuesday, the hashtag was trending on social media earlier this week. You've got artists donating to the cause, and they're calling on music labels to do the same because they say that the industry has profited so much off the backs of black artists, if you will. How do you think the music and the entertainment industry in particular can make a change?
Well, you're making the point I've been making all along, is that African Americans have contributed mightily to the success of this country. Obviously, labor, obviously going to war when you didn't have the rights here at home, fighting against Nazism, but coming back home and finding racism. So African Americans have paid their price to America. Now it's time for Americans to pay their price for African Americans. I know of so many artists who basically performed and wrote great music and copyrighted it, but lost all of that through contracts and controls that were put onto them by the record companies. And this is not new. And so when people say, Blackout Tuesday, or we got to do something about the entertainment world, the entertainment world has the same kind of behavior in many ways as other businesses in America. Redlining is a bank problem, much like stealing music rights is a music problem. Denying people full education is a problem. Denying people equal justice under law is a problem. The question we keep going around is, how do you solve it? And what I'll tell you, I am frankly tired of hearing politicians, in some cases black and white, engaging in platitudes about, oh, we must come together, we must sure everybody has justice, we're America, we're better than this. To me, that is akin to rearranging the deck chairs on a racial Titanic. These problems that we have will only be solved when African Americans and white Americans see each other as equals financially, opportunity-wise, and wealth creation. It will never be solved if African Americans are always behind white Americans in wealth. And if you look at it that way, African Americans could just say, we'll never be as wealthy, we'll never be as well off, we'll never have as much opportunity as white. So what do we want to do? Assign ourselves to being inferior? Well, if you do that, white Americans will say, well, the reason we treat you like this is because you decided you're inferior. My thing is, change that attitude. Give African Americans what the capitalist economy has given to everybody in this country. And much of what white America has came because of a huge financial wealth transfer from black workers, slaves, to white plantation owners and beyond. And it's still happening in many places today.
Bob, we're heading into a hard commercial break. I'm so grateful to have your voice on the show today. Thank you so much for sharing your thoughts with us. Bob Johnson, founder of Black Entertainment Television there. Coming up, we're going to talk about companies going public, Warner Music, and Zoom Info in a fresh wave of IPOs. That's next. Welcome back to Bloomberg Technology. I'm Emily Chang, talking now about IPOs and Warner Music. Shares of the company jumping on their first day of trading. The deal is the biggest IPO of the year so far, and according to Deal Logic, it is the biggest week of the year for U.S.-listed IPOs, believe it or not. Joining us to discuss, Equities and co-founder Phil Hazlitt. So, Phil, especially over the last week, as we've been dealing with these protests raging across the country, the markets have just been inching higher and higher. Turned out today was a good day for Warner Music to be going public. And I don't understand how investors don't seem to be rattled by what's going on outside of Wall Street. What's your take on this?
Yeah, hey, Emily, I would agree. I think today's IPO and the listings that are planning this week and how the stock market's performed really show that there is a really big divide and dislocation between the overall economy and its health and unemployment versus the market caps of a couple thousand public companies. And, the strength of this IPO listing and, a couple others are planning to come just really accentuate that. It's a bit perplexing, but it does seem like it's a bit of a new normal that we've seen over the past few months between, what's been going on in the last week and also with the coronavirus.
So let's start with Warner Music. Why the optimism about this particular company?
Sure. Warner kind of fits the bill of one of the companies that could go out as a public listing in the current environment. They were prepared to do so leading up to February and March. So, really what you have to think about is that Warner was basically a company on the precipice of going public a matter of months ago, had all its ducks in a row, had all of their filings prepared, their board, their corporate governance. So to turn on the switch and kind of reactivate it and go public, they had already had meetings in place with bankers. They had done a lot of the formalities in January and February. I think that combined with the fact that they're a household name and have actually had some pretty solid performance through their streaming music revenue in April, put them in a good place to be, the first major IPO to come out.
Meantime, you've got Zoom Info planning to go public later this week. What's your outlook there?
Yeah, Zoom Info fortunately kind of fits this nice kind of standardized enterprise SaaS company that Wall Street investors know how to evaluate. They know how to think about modeling revenue growth, gross margins, churn, et cetera. It kind of fits the bill as what you'd call a really normal software company that people can evaluate pretty simply. And I think they saw an opportunity to kind of come out. Zoom Info was actually, the outcome of a merger in 2018, 2019 that shows some pretty strong numbers. And I think they felt like now was a good time as of ever to do so. A lot of these companies that we're thinking about and that we're seeing at Equities N are really thinking about if they can go public, there's really a short window of time between now and call it October before the elections come up, which will introduce more volatility in the market, which is kind of the kryptonite to these IPOs.
So that was my next question. You think the next few months before the election may be the best time for companies considering going public in sort of the near term to take the plunge? And how would that apply to a company like, let's say, Airbnb, which, of course, their business has been exploded by this pandemic, and we know that they were planning to go public this year, but we can sort of assume that that's not happening.
Yeah, so it's kind of like that scene in Star Wars where you got Princess Leia and Luke Skywalker in the trash compactor and the walls are closing in. You've got coronavirus that's kind of continuing. You've got a lot of uncertainty in the markets. You've got social inequality that's in the forefront of people's minds. And on the back end, you've got the election in October, November, and that window's getting narrower and narrower. And I think the short of it is if you weren't a company that was prepared to go public in February or March, there's really no chance you're going to be able to get things lined up to move forward before November. And you're probably starting to think about what your IPO looks like in 2021 and beyond. Because the reality is that the book running process, the roadshow has been completely turned on its head as far as meeting investors go. A lot of investors aren't yet even comfortable making allocations into companies if they haven't met in person. And so I think if you hadn't gone through that process in the first half of 2020, you're probably going to wait till 2021 and maybe tap the private markets, which is what we have seen. We've noticed that big players like Silver Lake, KKR, et cetera, are writing large, IPO-like checks to companies like Airbnb and the lot and are kind of, placeholding what an IPO was supposed to be in the second half.
All right, Phil Hazlitt, we'll be watching over the next few weeks to see if what you're saying pans out. Phil Hazlitt of Equities N, thank you so much for joining us. All right, coming up just 3 weeks into her new role as the head of the Center for Democracy and Technology, Alexandra Reeve Givens has launched the first lawsuit against President Trump's executive order on social media. We're going to hear from her next. This is Bloomberg. Legal challenges are mounting against President Trump's executive order aimed at curbing the power of social media. The Center for Democracy and Technology was the first to file a lawsuit against the order, and so far the only. Earlier, I spoke with the organization's president and CEO, Alexandra Givens.
So what we're most worried about is that this EO is designed to deter social media companies from fighting misinformation, voter suppression, and stoking violence on their services. And what we're most worried about is that it's doing that during an election year. We are very concerned there's a wide public conversation around the power of social media, around the significant volume of conversations that happens on information platforms. And that allows really robust and important speech, but it also allows disinformation and misinformation to spread. We are very anxious about any executive order that is trying to coerce social media companies that are trying to take responsible actions to inform users, to flag content which raises those types of concerns.
Now, legal experts say that President Trump lacks the power to do anything about Section 230. I mean, does he really have the power to impact it here?
Yeah, it's true. So the executive order not only raises very significant concerns under the First Amendment, but in addition, it's a runaround Section 230 established law, and really is trying to short circuit conversations on Capitol Hill, as well as in the broader public forum about what can be happening, which is another reason why we're so anxious about the form that it takes.
So the Department of Commerce, the FCC, none of them have taken any action yet, and they still may not. So what is the harm, and what gives you the standing to file a complaint for harm?
So CDT has had a long history of speaking for internet users and the broader public on questions of free speech and content moderation. We've been working on these issues for 25 years. Because retaliation and coercion can have such a chilling effect on injured parties' willingness to bring suit, First Amendment doctrine typically recognizes the value of organizations like ours to be able to speak up in the public interest and fight for these values. Very technically, we also anticipate that under the CO, we would have to expend significant resources pushing back on orders followed by the FCC, on efforts as the FCC or other agencies try to evaluate whether or not companies are in compliance with the executive order. And all of that puts us in a position of material harm that we need to be able to respond to.
Now, Section 230 was written in 1996, before Google existed and when Mark Zuckerberg was still a child. I mean, do you really think that it can remain untouched? Do you expect Congress to step in here?
There's a big public conversation happening around Section 230, around content moderation practices in general. We think that conversation is really important. CDT is at the front lines of those conversations and often spends a lot of time working with companies, pushing back to help think through how do we get better transparency, better accountability in those decision-making processes. So we acknowledge that fight. We do think that Section 230 is tremendously important in terms of supporting freedom of speech. It plays an enormous role in allowing platforms to host and moderate content without fear of lawsuits arising from their decisions. And that really matters. When you start to think about how platforms would react if they are responsible for every single post that goes on there. Thinking about libel for people that allege coercion or violence by police officers, for example. We are very worried about the stifling effect if information platforms don't have that type of protection. I was going to say, at the same time, we do acknowledge that there's a big conversation about how that moderation should happen. We want that debate to take place. What we don't want is the president bigfooting in and deterring companies from taking responsible action to respond to misinformation online.
The case was just filed. What is the actual status of it at this time?
So just filed yesterday in DC court. That means that there's a little bit of time, about 30 days for the government to respond, and we'll be watching for that response.
Twitter is supporting your suit. Have you heard from any other companies, specifically Facebook, about whether they're going to throw their weight or warrant behind this as well?
We got a retweet from the CEO of Twitter. So I suppose that's, that was a nice acknowledgement by them. But we work fully independently. CDT is funded by a wide range of nonprofits as well as by companies, but we make all of our decisions for litigation wholly by ourselves. So this is us speaking up on behalf of the public, trying to weigh in and stopping this type of coercive action on such important questions of misinformation.
Meantime, Twitter has taken a pretty dramatic action in hiding and flagging one of President Trump's tweets. Facebook has taken the opposite position, left the post up, saying they don't want to be the arbiter of truth. Who's right?
So I'm going to say content moderation is really hard. Part of what we want is a freedom and a range of companies and platforms to be able to make individual nuanced decisions based on their own policies and what they think are the right judgment calls. So I'm not going to say what my personal view is of the right outcome there, but what I do want is for companies to be able to listen to what the public is saying, weigh those factors, make nuanced judgment calls on what are really complicated decisions, and have some of that flexibility without fear of the executive branch coming after them for the precise way in which they do it.
Now, you mentioned that we're in an election year, and Twitter is now in a position that they've taken a stand. They're probably going to have to take some more difficult stands leading up to the election. And could that become problematic in itself, in that it's almost drawn more attention to this tweet? And you've got people out there saying this is censorship and perhaps not something a private company should be doing, a slippery slope.
Yeah, so one of the things to note about is the form of content moderation, right? So there's taking stuff down, then there's fact checking it. And for the tweets that are at issue in our lawsuit that we think that prompted the EO that we're responding to, Twitter actually wasn't even taking down that speech by the president. They were just saying, here are the facts on how mail-in ballot voting works. And you may want to read more about this when you see his allegation. So that type of behavior, we really need to think about the role of that type of fact checking. And again, the platforms have protections under the First Amendment. Set aside statutory protections of 230. They have the protection under the First Amendment to be able to make moderation and fact checking decisions like that. I agree that it's complicated knowing exactly how they should do it and serving the role of arbiter. One of the things that we think is really important is making sure that any company making these decisions has accountability in that decision making, is transparent about the type of factors that they weigh, give people a right of redress and conversation as to what is being taken down and why, and that the public can understand what decisions are being made. A lot of the companies have a way to go on that, but we try to work on that and make sure that that's a really important piece of this very, very complicated puzzle.
Now, you just took this job running the CDT 3 weeks ago. You've obviously been a lawyer for many years, but coming in strong, suing the administration after 3 weeks on the job, I mean, can we expect to see more tough actions like this from you? I mean, how does this sort of forecast what's to come?
So this was an issue that we felt we had to engage in. CDT does not file a lot of lawsuits. We have done it for a long time. We were involved in the ACLU v. Reno back 25 years ago. We've fought for free speech for a long time. Litigation isn't our usual tactic, but on a matter of such national importance as this, we just look at what's happening in the world around us this week. The First Amendment and the freedom to speak up without fear of government coercion is more important than ever. And so for me, that judgment just spoke for itself. We needed to speak up and make sure that we took a stand against the executive order.
Alexandra Reeve-Givens there of the Center for Democracy and Technology. Meantime now to another lawsuit, this one against Amazon, a group of warehouse workers suing the online retail giant, saying they put them at risk of contracting the coronavirus as well as their family members, including one who died. The Staten Island warehouse in question has been a focus of health and safety complaints since March, when employees mounted the first of a series of walkouts. I want to bring in Bloomberg's Josh Eielson, who's been covering this story. So, Josh, what exactly happened here?
So this comes after months of walkouts, calls for information by U.S. senators, calls for investigation by state and other officials, protests, now we see this federal lawsuit in New York that makes some grave, significant claims about what the company is doing, claims that are significant both in that they identify a specific employee and a specific member of her family, her cousin, who she says died because she contracted the virus at Amazon and shared it at home. And these are significant claims because of what they allege about what the conditions have been in the warehouses, including that workers allegedly are told not to tell their coworkers if they're infected.
Really? Tell us about that.
So the lawsuit alleges that Amazon tells workers not to tell each other if they're infected, and that the contact tracing that Amazon is doing, rather than following government guidelines, consists only of looking at what's on surveillance video and concluding from a surveillance video who has or hasn't been in touch with each other. The lawsuit also alleges that oppressive and dangerous quotas and disciplines that keep Amazon's productivity up by regulating minute to minute how people are spending their time are inconsistent with what people need to do to keep themselves safe and cause people not to have the safety measures that are supposed to be happening. The lawsuit accuses Amazon of creating a facade of compliance.
If true, I mean, that just seems so wrong, because when you contract COVID-19, aren't you supposed to tell anyone and everyone that you've ever been, even remotely in contact with? What is Amazon saying about this lawsuit?
Amazon so far has only said that it's reviewing the complaint. Amazon has said previously that they've updated over 150 processes to protect employees, that they're spending hundreds of millions of dollars on safety measures, and that they offer additional paid time off if people are diagnosed with the virus.
Interesting. All right. Well, Josh Adelson, I know you're going to continue to follow this story of this new lawsuit. Thanks so much for giving us that update. Still ahead, we're going to dig further into developments in U.S.-China relations, tensions continuing to escalate as both U.S. and China investors face some big decisions. That's coming up. This is Bloomberg. In the last 2 weeks, the world has witnessed political and social crises in both the United States and Hong Kong as tension between the U.S. and China continues to escalate. The very latest, the U.S. now banning flights from Chinese airlines into the United States, passenger flights. I want to bring in Sheryl Chang, a digital health investor and general partner at BRV, for her latest thoughts on the tension. So, Sheryl, things ratcheting up here day by day. What do you think that means for you as a cross-border investor and other cross-border investors not knowing which path this is ultimately going to take?
Hi, Emily. Yes, so there's been growing tension for a while. We started to see it actually as early as 18 months ago when the China trade wars were kind of coming in fits and starts. And so from an investor standpoint, we've been watching the situation for a while. It's obviously accelerated and gotten worse. But I think that in general, there's two issues with Hong Kong, right? One is more geopolitical, and then the other is more on the financial investing side. On the financial investing side, most people are looking to China as the main area for investing in Asia, and Hong Kong is kind of part and parcel of Greater Asia. So a lot of these new declarations don't necessarily impact Hong Kong directly or impact U.S. investors. It does, however, change the view of Hong Kong in the eyes of investors from being the previous financial epicenter for Asia to now having a different role. And I think we're seeing new technologies and new areas emerge from Hong Kong, COVID has made Hong Kong invest a lot in public health. They have a digital platform now for all citizens, and they have something even for startups and small, medium-sized enterprises. We're seeing Hong Kong really focus on media. So I think there's going to be new investment opportunities for investors to look at Hong Kong. For me, myself, I'm mainly focused on digital health, so I'm very interested in some of the collaboration that the Hong Kong government has done with universities to promote digital health and health and wellness for its citizens, particularly during COVID. The second issue with
Meantime,
Hong Kong,
quickly,
though,
Hong Kong, Sheryl, if I may jump in quickly, you've got Hong Kong, of course, with its own stock exchange. Many Chinese companies have chosen to list on the U.S. exchanges. Instead, you've got the SEC now mulling delisting several Chinese companies. If U.S. officials can't take a look at their books, I mean, how potentially devastating could this be for some of these companies?
Well, it can be very devastating, and it's going to put a halt on their liquidity pathways in the short term. Ultimately, it will be a challenge for Chinese companies or Hong Kong companies to cross lists. But there is a history of a Hong Kong stock exchange that can provide liquidity for companies. So I think ultimately investors are global investors, and they will invest off of the Hong Kong Stock Exchange or the U.S. Stock Exchange when the companies become public. I'm not a public equities investor. I mainly focus on early-stage technology companies. So for us, when we think about a young startup, when we invest, and ultimately what does it become when it's ready to go public, there's many years in between our initial dollars and when they're ready to go public. So you can be building a company for the right exchange that you think you're ultimately going to trade on. It is really unfortunate for companies who were on a path, let's say in the last 6 months to maybe the next 3 or 4 months, thinking that they would list on a U.S. exchange, and that's not going to be a possibility. I will say that, and you've covered it before, that given the current pandemic environment and overarching economic environment, all IPOs will be somewhat challenging.
Okay, we'll have to leave it there. Sheryl Chang of BRV, thanks so much for sharing your perspective with us. We're going to continue to watch developments in the U.S.-China relationship as they continue to unfold. And that does it for this edition of Bloomberg Technology. Bloomberg Daybreak Australia is next. I'm Emily Chang. This is Bloomberg.